मेरे में आवाज नहीं आ रही।
Good morning, everyone. We can see today there are very few participants because today being a Saturday. But anyways, we'll start the call. US markets were up more than 1% yesterday. S&P 500 index closed at all-time highs, driven by a rally in technology stocks. Previous high was made in Jan 2022, that is exactly 2 years back. Uh, Combination of three things is leading to this rally in US. The promise of generative AI, that is artificial intelligence, which is becoming a reality and leading to a bull market in technology stocks. Number two, better than expected economic growth on most of the data points that are being released in US. And number three, a consistent decline in inflation. So all three are contributing to supportive markets. Asian markets are closed today, being a Saturday. FIs remained net sellers in Indian equities for third consecutive day on Friday. I will now invite the technical team to take the call forward.
Thank you, Jayan. Good morning, all of you. As Jayan said, we're expecting a flattish opening and we're expecting a range bound move in today's trading session. Yeah. So the immediate resistance for Nifty is currently placed at 21,700. If we see a closing above, then we can expect a level up to 21,770 to 21,800 levels. Whereas the downside support lies at 21,570 and 21,500. Moving on to Bank Nifty has immediate resistance around 46,000. Higher levels will be 46,200 and 46,400, whereas the downside support is at 45,600 and 45,400. If we talk about Fin Nifty, the resistance levels are 20,560 and 20,700, whereas the support lies at 2330 and 20,230. Talking about stocks, Scotch and Apollo Hospital are looking good at current levels. Apollo Hospital can be bought for a target of 60 to 60 by keeping a strict stop loss of 1,500. And Scotch can be bought for a target of 3070 by keeping a strict stop loss of 2,920. That's all from my side. I request the derivatives team to take the call forward.
Yeah, thank you, Ayush. On the derivative front, open interest wise and everything wise, data is still positive. Good base building around 21,500. Looks like buying is likely to come in up to the 21,800 to 22,000 levels. So continue to remain long with a stop loss of 21,500. Stock specific front, almost all stocks are doing well. Banking should witness good short covering action. So concentrate on banking. It should give good returns. Yeah. So that's it from my side. Like to as a fundamental team to take over, please.
Yeah. HFCL has received an order worth 623 crores from telecom service provider for supply of 5G equipment. This is positive. On the result side, Reliance result is in line with expectation. Strong performance from retail was offset with weak performance from O2C, that is oil to chemical, and telecom remained stable. Revenue declined 3% sequentially. That is total revenue for Reliance declined 3% sequentially, increased 4% year on year. EBITDA was flat sequentially and grew 15% year on year, mainly led by retail segment where EBITDA grew by 8% sequentially and 30% year on year. EBITDA declined sequentially in oil to chemical on account of lower GRMs. And for telecom, the EBITDA grew by 3% sequentially and 11% year on year. So overall, result is in line, and our view is positive on Reliance. 197 Communications, that is Paytm, result is in line with expectation. Revenue growth was at 13% sequentially, 38% year on year. Loss came at 220 crores versus expected loss of 247 crores. So losses have been consistently reducing, but owing to the recent RBI embargo on which impacted Paytm, our view is neutral on Paytm. RBL Bank result is in line with expectation if we were to exclude the one-off higher provision made towards AIF. Advances growth was steady at 4.7% sequentially, 20% year-on-year. NIM came at 5.5% versus September quarter's 4.9%. This is a good jump in NIM. This was mainly due to better retail mix, more contribution from credit cards and MFI, which led to this jump. Although on the other hand, slippage is also increased from 2.8% in September to 3.3%. This is one of the highest that we have seen in financials. So that was like a dampener for RBL Bank, and that is why our view is neutral over here. Credit Access Grameen result has declined mainly because of asset quality, which witnessed some deterioration. Loan growth was at 4% sequentially, 31% year-on-year. Credit cost increased from 1.7% in September to 2.2% in December. This is mainly because of slight inching up in the NPAs and as well as DPD. GNPA increased from 0.8 to 1%, and 1+ days past due also increased from 1.3 to 1.8%. This is mainly because of seasonality, and secondly, there were floods in Tamil Nadu. Tamil Nadu forms almost 20% for credit access, so naturally that had some bit of impact. But we think that asset quality will stabilize once we move into coming quarters. So from a near-term perspective, our view is neutral on credit access, but long-term we remain positive. Thank you. Yeah, so that's it from us. Thank you very much and have a good day.